Hey guys, welcome back to my channel. I'm Leah Harrison and this is Rhema Wealth Strategy. I'm here today to talk to you about the infinite banking concept. It's a peanut butter word. I see it get abused so much because people will claim that they know what it means and how to write an infinite banking policy, which is really a banking function that's utilizing a life insurance policy to accomplish that. Comes with a death benefit as a cherry on top. But the concept of this is to utilize this while you're living. It's a banking feature, banking functionality. It's kind of like a private financing for your personal financial ecosystem. Those are big words. What I'm trying to describe is if you're part of the wealth transfer community, you're believing that God has started to lay the tracks and the foundation for another great wealth transfer, similar to what we read about in the Bible. We've read about, or you can read about Joseph and the famine in Genesis chapter 47, in Exodus, when the Israelites left Egypt and plundered the Egyptians, another huge wealth transfer, and we're being lined up for another one. Even in the secular financial world, this term is being used, a great wealth transfer. They're calling it the silver tsunami, where that particularly is talking about a huge transfer through inheritance. The baby boomer generation will be leaving trillions of dollars in inheritance that'll go to their heirs, to charities. So there are going to be people that are going to be inheriting windfalls of money, but also in the wealth transfer community of believers that want to have kingdom impact on this earth, to grow the footprint of heaven with the impact that we have on our lives, that God has called us to walk out. There are some prophetic investments that you felt called to invest in. It could be precious metals, it could be some foreign currency, the dinar, the zimbans, the Vietnamese dong. I'm not here to talk about those, but I'm here to talk to you if you've been pursuing that and stepping out in faith in that area, and you have investments that you're anticipating will take off. And there's going to be a point where you need to pull those investments out, or you might pull portions of that investment out to retrieve some of the profits and reduce your risk exposure. And you're questioning, what am I going to do with it when I pull it out? Where do I keep it? Am I going to put it under my mattress? Am I going to put it in a safe? Am I going to leave it at the bank? Am I going to put it in the stock market? You probably don't have a whole lot of faith in the stock market. And you're questioning, well, what if it drops? You want to be a good steward of the resources that God's leading you to invest in. And I'm here to talk to you about infinite banking as a broad term. I'm going to explain something. I want to explain this in very simple terms about what this means and why it's important for you to understand this. I think it's an important strategy, not for everybody, but I think that you should be aware that this exists and then pray into it. Let God lead you. If you're feeling led to pursue this, you should. I will leave a link on how to contact me in the description. I personally design this for people. My husband and I do this in our own lives, is how we are stewarding our resources. We're stewarding what God's put in our hands. So let me get into it. I'm going to explain 3 conventional ways of storing your money, and I'm going to explain infinite banking concept and what makes that different and what makes it better and why you need to know about it. So let's just talk about the bank. It's pretty simple. You can put your money in the bank, as we all know. We'll make that the little bank symbol. You can put your dollars there. Make sure you can see me. You can put your dollars there and it'll grow a little bit. What the bank does there is they 10x it. They lend it out. They also lend it out to you. So let's just pretend there's 10 lines there. And what happens is, I'm out of the picture, but I just want you to see this. What happens is, obviously, as they lend it out, they generate money that makes them rich, fat, and happy. And they're happy, right? Smiley face over here. Bingo. That's a pretty conventional way to save your money. Let's look at number 2. Number 2 is you can put your money in investments. It can be retirement, or it can be, that's considered qualified. Non-retirement accounts is considered non-qualified. Fancy words for just, is it tax protected or not? Are there tax advantages or not? So now you got your investments. Let's put bank over here. Boom, boom. This is just kind of a quick and dirty explanation because I answer these questions a lot and I think there's so much confusion because it sounds like a complicated topic, and I'm going to demystify some of the confusion or some of the mystery behind this term. So next here, you can invest in tangible property. This can be, maybe you purchase a home for yourself. Maybe you purchase a duplex. Maybe you purchase a multi-unit, 3 or 4 unit. Boom. The cool thing about this, so this can grow and your investments can grow. The bank storage can grow, what you're keeping there. Here, another bonus is the value of the property grows. I'm just putting that percentage as a growth. It also cash flows because you get rental income. So cash flow, that's a good thing. That's cool. A lot of people like the idea of that for that reason. It grows in value and it cash flows. And if you need to borrow on it, I guess you could. The downside with these two is there's risk involved, definitely in the stock market. There's risk here in that you're not sure either what the current landscape will be in the real estate environment. So you could be in a buyer's market, you could be in a seller's market when you need to do something with it. So you can't guarantee that you know what the value of the property is going to be necessarily. So you could put your cash into a real property right out of the gate. Let's talk about IBC. Infinite banking. IBC. What makes this powerful is it does 2 jobs at once. With the bank over here, your money's in there, but once you take it out, it's not working for you. It's not earning interest when it's not in the bank. Same thing with investments. It's not earning interest when it's not invested. Your dollar can't do 2 things. You can't have it invested and purchase something at the same time. Over here, if your money's in the property, yes, you have cash flow, but 2 things that are variable is you don't know the value of the property if you need to access equity at some point. You also don't know for sure. There's occupancy rates, right? And churn and turnover. It does cash flow, but there are cases when you have an empty unit or multiple empty units. So there's a variability here. What IBC, what infinite banking, with a properly designed policy, this is using a whole life policy for the banking feature. It's code 7702, the IRS code 7702, and it is powerful. It lets you use a life insurance policy and access the cash while it continues to grow, and it has tax benefits. It's powerful. I'm not going to go into all the reasons, but I want to explain conceptually what this represents. This is like owning the storage unit. So if you need to put your cash somewhere, think of it as you're going to purchase a storage unit. And the storage unit comes with obviously the office, but it also comes with the individual units. So you have the property and the cash flowing storage unit. So this also goes up in value, and the storage units provide cash flow. What's really powerful about this is that it's guaranteed to grow. It grows. You're not exposed to market volatility. So think of it like this. If you were to buy a storage facility versus being a consumer and renting a storage unit, you're taking your cash to become an owner in something. When you open a life insurance policy, you're becoming the owner. The policy owners own the policies. It's not a stock owned, or it's not owned by there's different ones where it's owned by the policy owners or stockholders. Sorry, it's late. I'm trying to pull words out of my head. This is powerful because what this does is it puts you in control. Your house, your rules. It's very important that there's some specific features of the right type of policy, which is it should be a mutually owned whole life insurance policy. It should be dividend paying. The dividends aren't guaranteed, but the right companies have been paying dividends for 100+ years. It also needs to be a policy that offers non-direct recognition borrowing loans, meaning when your money's at work in the policy, if you need to borrow on it, which you can, it's almost like getting a private line of credit based on the collateral. So it doesn't reduce what's in your policy, you're borrowing a private line of credit as a result of the equity that you have in the company. So think of it like owning the storage unit. If you had to borrow money, you go to a bank and you wouldn't sell your storage facility. You would say, hey, I own a storage facility. It's worth so much money. It cash flows. I need to borrow $100,000. Can I do that? Yes. And so what happens is, who gets involved then? Think of them like the property manager. The property manager is the insurance company. They're the admins. They are not the owners. Your house, your rules. You mutually own the policies. You have your own policy. You're a mutual owner in this insurance company. So the property manager is the one who manages the lines of credit. So you can take a loan, below the line, let's call it. So you can take a loan and you pay back the loan. And what happens is the property manager, a worker deserves their wages. The property manager, at the end of the year, they figure out how much it costs to run the company. They subtract that. In life insurance, there's also death benefit claims that get paid out. And at the end of the day, there's profit. And that's the dividend. Guess where the dividend goes? The dividend goes back to you. And it's non-taxable because it's considered a return of premium. And it creates this infinite loop. So the value of what you own never goes down. It only increases. And as you, just like if you bought a storage facility, you put a down payment, boom. So you have a portion of the equity. It doesn't reach its full potential right up front. You build the equity as time goes on. So as you continue to make payments, your ownership equity continues to grow. And over time, your policy grows. Isn't that wonderful? So you keep filling up the boxes. You fill up these boxes. This is how the right design policy is designed, that you have a bunch of storage units that you can fill up. You're not punished if you don't, but you have room to grow. You have room, and the right policy is designed that when you put your cash in, you put your money into the policy, it's producing the cash flow. So think of these storage units as the cash flow of the policy. So the more of these units you fill up, the more powerful the cash flow component is of the policy. The cash flow grows the value. You build more equity because you can pay for more of the policy. So it's a strong foundation in the world of finance, of corporate public finance. Life insurance is considered tier 1 capital because it is liquid and it's safe. It's a strong asset. Life insurance is an asset. So that's why I want you to think of it like buying your own storage facility. You are now taking control of your financial ecosystem. You're the one who gets to control when you access the equity that you built. Over here in this space, if you're invested in retirement products, you don't get to decide all these things. You're limited on when you can take it out. You get penalized if you take it out too soon. And if you need to take it out when it's at a dip, good luck. You're kind of at the mercy of the market. And the same thing here. If you need to sell a property to get cash flow or something, or whatever the need may be, you're at the whim of what the market says it's worth. Over here, it's a guaranteed lifetime value. And that lifetime value gives you access to unlimited private financing, if you will, a private line of credit. Think of it like that. You can constantly borrow and repay back. And if you're a smart owner, you're going to pay yourself back. So you're not cheating the system, but there's value in that. When the profits come back to you, they come back tax-free. And I'm also going to say this because I went through the Dave Ramsey coaching, and I'm a big fan. I actually really do like Dave Ramsey for the principles that he teaches, but he bashes whole life insurance. What he's bashing is not how these policies are designed. Susie Orman does the same thing. This is so niche and so unique. The world of investors and life insurance agents will say they know how to write a policy this way. I guarantee you a majority don't. There's a small percentage of agents who know how to write policies the right way. The policies pay a whole lot less to the agents because they're designed to benefit the client. They're not commission designed. They're efficiency designed, meaning they're designed to give the owner of the policy access to cash. It's not based on the size of the death benefit that the agent gets paid on. So agents get paid a whole lot less. It's not that enticing to be an agent in this world if you're out for the commission. And when I went on this journey, I'm looking at my time, I've got a couple minutes left on my recording. So I'm going to wrap it up. This is how my husband and I are building our financial framework now. We have explored so many options. We're mid-40s. And what I got so frustrated with was when we got to the point where we needed to access the money that we were putting in the investment space, our hands were tied because it was locked up in retirement accounts. Same thing. When we wanted it, we had to time it with the market. This removes all that. This comes with risk. This comes with risk in the investment world. Even the banking world has limitations, and you're making them rich. You're not getting yourself paid. And over here, when the money comes back to you, your policy grows, your ownership percentage just keeps on growing, and it works for you. So I want to drop this in here that if you're preparing for the wealth transfer and you're trying to think about where do I go to do this, I will drop a link to my email. You can contact me, but you can start getting the framework set up. You can start a policy for a very small amount, a proof of concept. If you don't want to, design a policy for a large lump sum that you don't know exactly what it'll be, you can do things where you can lock in. You do have to qualify with your health, just like a regular life insurance policy. What makes it a life insurance policy is it has to have a death benefit, but you're buying this for the living benefits, which is the banking benefits. This is a deployment platform. You land it here, get your money working for you, then you get the loans out and go deploy it. You go deploy it. It's simple interest loans, so you pay it back fast, and then you go deploy it again. You use this for your purchasing power. Your business is what funds your calling. You're buying the business. You're buying the policy. So that was a lot. I want to drop a nugget. That's why I want to drop a nugget in so you understand a little bit of this concept. I'm going to get into this a whole lot more in more detail, but I want to whet your appetite. Just think of an insurance policy as a storage unit. You're buying equity ownership position in a storage facility that is yours. You design it the way you want to, as big as you want to. And if you need more, you make more. You can start small and grow. I'm going to answer a lot of those questions in the future. I've got 20 seconds left on my phone, so I'm wrapping it up. Thanks for hanging in there. If you have questions about this, if I just threw you for a loop, put it in the comments and let me know what kind of questions you have so I know how to answer these questions for you. I'm here to educate you, and thanks for being with me. Bye for now.